Good morning, this is Jack from Charting the Markets, and this is a pre-market webinar for the morning of Thursday, the 22nd of May. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own chance. I'm not here to issue trading signals. Right. Okay, we've had obviously some retracement here. We've got a little level top here, which has broken down with a target to the 58.10 area on ES, and we've almost made that target. Actually, it's more like 57.90 to 58.10. But to be honest, I'm doubtful about reaching 58.10. And the reason is that we've now got some positive divergence here. We could see another leg lower. Don't want to rule that out at all, but I have to say, I'm looking at the historical stats. I'm not hugely impressed. For today and tomorrow, they are pretty neutral. But tomorrow tends to be the Friday it's Friday before Memorial Day, and it tends to be lackluster with light trading. So basically, it's holiday Friday. Next week, we've got obviously a holiday on Monday, and we've got bullish leaning stats 71% on Tuesday, 67% on Wednesday, 71% on Thursday, and then the last day of May, which is Friday the 30th, we've got 40% bullish. So that is bearish leaning, but it's the only bearish leaning day next week. And actually, the following week, on the Monday and Tuesday, bullish, fairly strongly bullish leaning stats there too. Is this a good time to see a larger retracement? No, not really. So what I'm thinking is, whatever we're going to see is probably going to get done today. I might be wrong, but historically, I tend to look at the stats on these things, and it's generally not a great idea to be consistently fighting the stats. So the stats say that we've got bullish leaning tape really from today going on for thick end of 2 weeks. We will see what that develops. As it happens, we have seen a nice little retracement here. I'd love to see more, but I would note that we've got 15-minute buy signals pretty much almost across the board on the RTH charts, not on NASDAQ RSI 14 on 15-minute, but pretty solid. On the hourly charts, the RSI 14 sell signals on SPX, on NASDAQ, on Qs, and on IWM have all reached the possible near miss targets at least. SPX and IWM really have reached the full targets. And here, we don't have any positive divergence on ES, and we could easily have developed some, but we've got a marginal lower low. We're catching a break off here. We've got 15-minute buy signals on RTH. No positive divergence on NQ, but we do have a possible 60-minute buy signal brewing on RTY, possible 60-minute buy signal brewing on YM. DAX, we've got a 60-minute sell signal fixed here, and it hasn't reached the target yet, but ESTX, it did reach target. So we're running out of sell signals here, although we've got some interesting stuff happening on the dailies I'll come to in a minute. But in terms of the historical stats, after today, they're all bullish. Not tomorrow, but tomorrow is basically a week volume holiday day. But basically Tuesday, Wednesday, Thursday next week. So a bit of a bearish day on Friday, and then and then the Monday and the Tuesday of the following week. That's quite a lot of bullish leaning days in a row. And I'm slightly skeptical about the market retracing through that. We will see. So this might be all that we're going to get. So be prepared. All right, let's have a look at the bigger picture charts. Okay, looking at SPX, I was thinking that we could see a retracement on RSI 5 here, and then a retest of the high, and that could give us possible daily sell signal brewing. We haven't seen that. We have seen a move below the 50 level. That's not going to generate a sell signal. In terms of the hourly chart, the RSI 14 sell signal is pretty much made target. So I'm not really looking significantly lower. We do have a little level top here, but it's pretty much made target already on SPX, or at least very, very close. Again, I'm not assuming we're going to see any more downside there. It did look as though we'd see some on ES, and we've seen that. And that didn't generate the positive divergence I feared, but we have got that elsewhere. What we do have is on the 15-minute chart, RSI 14 buy signal fixed, RSI 5 buy signal fixed on the Qs. We've got an RSI 5 buy signal fixed. On Dia, we've got RSI 14 and RSI 5 buy signal fixed, and on IWM we've got RSI 14 and RSI 5 buy signal fixed. That's a lot of buy signals, and it may well be that will carry us up, and it may be that we're not going to come back after that rally. So we shall see. All right, looking at the cues, RSI 14 sell signals reached the possible near miss target. We've got a little level top here. It has broken down. But actually, the operating one here in Q, judging from the highs, would be this one here. A little lower would satisfy that, but we may or may not get that. In terms of the signal, I'm pretty much writing that off now. Looking at Dire, we never had a 60-minute sell signal. If we had, it would have made target. We could form a head and shoulders here, form a right shoulder, and do another leg down. But as I said, the stats aren't leaning towards it. We haven't got a lot in terms of signals to suggest it. But we do have now a full RSI 14 sell signal, RSI 5 sell signal fixed on Dow, but it's the only one apart from IWM. So let's move up over to that. But IWM is somewhat weakened by the fact that it's actually already reached the possible near miss target. So I haven't marked that on yet, but it has. So we saw the strongest move down yesterday, and that's because of the problems in bonds, to which IWM is generally agreed to be the most exposed. I'm going to talk more about that, but I'll come to that when we're talking about bonds. In terms of IWM on the hourly, we had an RSI 14 sell signal that made the full target. On the chart here, we've got a little double top, which may make target the open here, although it wasn't that close to the target. We shall see. Do we have possible head and shoulders here forming across the board? Arguably, but not strongly indicated. So what I'm saying is, in terms of more downside, I'd love to see some, but I think the higher probability part of the decline is the one we just saw. So anything else is a lot more speculative and fighting the historical stats. Looking at DAX, DAX has gone a bit higher here. We retraced a bit yesterday, but not a lot. We've still got a possible weak RSI 5 sell signal brewing, and we'll see how that goes. Nikkei at the moment is failing at the 200 DMA. That may change. If it doesn't change, then obviously that's going to limit upside a lot because we're basically just below it. If it breaks above, and Japan's having issues at the moment and was also having trouble on the bond market, then if we can break above, we could see a retest of this high here at 42.4, but the action's not really suggesting that strongly. We will see. All right, let's have a look at DX. DX hasn't really been doing a great deal. We've got 6-minute buy signal that's fixed here, and that's playing out into a little rally, which is probably going to go a little higher, but then it'll make the target, and then it's off the table without actually doing a great deal. In terms of the head and shoulders that's broken down, I'm still liking this, and it's got a target in the 98.4 area, and I still think that may well make the target. Looking at the other currencies that are interesting here, USD has broken up for an IHS and a decent one with a target in the 1.152 area. I'm liking this. I've got a 60-minute sell signal that's already reached the possible near miss target. GBP, we have this flag break up there, and that's already made target. USD JPY, we're seeing a bit of a rally here on the 60-minute buy signal, which hadn't really done much beforehand and really hasn't done an awful lot now either. Watching to see where this gets to and whether it breaks declining resistance, but we will see. In terms of the head and shoulders, it's a nice one, and it's got a target down in the 141 area, which we're still well short of. I'm thinking this has got a decent chance of making target. We will see. All right, let's have a look at bonds. Bonds, where again we've got a possible 60-minute buy signal brewing. We're seeing a bit of a rally here. We did see an interesting milestone overnight, and I'm starting to cover ZN by the way, which is the 10-year bond, and this is. I've got a nice channel here, and I'm wondering whether we're going to head down to the support here, but we did reach a very interesting milestone overnight. And that is, I've been looking for, on TNX, a retest of this high here in the 49.97 area. This morning, we hit that on TYX. TYX has gone rather further in terms of retesting the high, and the high so far today is 51.53. This high here is at 51.52, We've just made a new high here, and actually, if you look at the bigger picture charts, this is the highest level that TYX has reached since 2009. So this is, and also this is, we've now reached the inverted head and shoulder neckline that I've drew in here, and we are testing it. Now, this is, I think the final push was basically the big beautiful bill passing Congress overnight. This is something to watch. Now, when I was talking about disruption on the markets this year, I wasn't really talking about tariffs, although I was thinking there'd be some trouble from tariffs, but I didn't expect the amount that we've had. What I was talking about was the tax and spending plans, specifically that are now being delivered in terms of the big beautiful bill. Now, those tax and spending plans were likely to increase. They were likely to entirely ignore the large existing debt and make it larger. And this is what I'm thinking might cause the turbulence, because that could spike yields up. And we've got IHSs forming. Here, we've now completed this IHS on TYX. And if we see it break up, this has got a target in the 95 area, which is pretty much the 61.8% retracement of the whole move down from the 1982 high. Yeah, 1982. I think this could be a contender. All we need to see is a loss of confidence among international investors, and of course, one of the protections the US has had is because obviously all of the holders are its allies pretty much. But how fond they are feeling of the US after the year so far is very much open to question. And really, with the administration also talking down the dollar and saying it wants a big reduction in the dollar to improve competitiveness of US imports, of course, everyone holding assets in dollars and treasuries, particularly, of course, the covers equities as well, is if the dollar, let's say, goes down 25%, which would be entirely fair to say by historical standards, 25 or 30% would be the obvious next move. If we see that decline, then anyone holding US dollar assets just basically gets 25, 30% taken straight off the top. If we also have trouble in US treasuries and the yields go up, then of course they take a haircut on that as well. So this is actually making US assets quite risky to hold, and this is one reason why why treasury auctions are now starting to struggle, because foreign interest in them has been dropping considerably, and that is entirely rational. This could actually push us into an inflection point where interest rates go up a lot. We will see how it goes, but this could get very, very, very interesting. So we shall see how the big beautiful bill does in the Senate, but this actually could precipitate the crisis, and this is what I was talking about in November last year. We shall see. All right, let's have a look at CL. CL, I'm thinking we might see a fail here. I have been talking about this. I've been talking about the fact that we already had nice looking, sorry about all the beeps. We had already had nice looking bear flags on HO. We already had one on gasoline. And on CL, this high here was slightly higher than here. So this is an alternate bear flag resistance trend line. If we basically get this close, but not quite fully to this IHS target, but almost. We've now formed a double top here. If that breaks down, that could take us straight back to flag support, and I likely break down into new lows. This is something I've been talking about for a while. And we will see how it goes. But it wouldn't surprise me at all to see energies go down, and that is pretty much what I would expect to do with a reduction in economic activity, which is what I suspect strongly that we are looking at in the US economy here. NG, we had a nice looking bull set up here. We had an IHS, it broke up and then it failed. 60-minute sell signal is fixed, hasn't made the possible near miss target yet. But with this failure, normally I'd expect this to head back to this low in the 3.1 area and then very possibly to retest this low in the 3 area. Again, energies, 40% of US power, I think, comes from natural gas. If we've got struggling economic activity, I would expect to see downward pressure on natural gas prices. All right, GC. Still got a bull flag forming here, still got an IHS which has broken up. We had a sell signal fix here, and that's made target, without actually doing much damage to the downside on GC so far. So I'm still liking this. I'm liking gold all year pretty much, and I'm thinking this is a bull flag for me. SI, the bull flag has broken up, but we had a sell signal that's made target again, didn't do any major damage here, and I'm leaning higher here. Now, palladium and platinum, these have been rather weird in recent days, and that is because, well, I don't know why that is, but they have really outperformed the other precious metals. I'm not sure why that is, but we've now got 60-minute sell signals fixed, and I'm looking for a bit of retracement on both. On platinum, I would note, I was talking about the bigger picture yesterday. I was talking about the fact that this has now reached its range high, the sort of consolidation triangle we've been seeing for the last 2 years. We're testing that now, and I'm watching with great interest to see whether it breaks out. HG, this has been consolidating for a couple of weeks now, and it's still consolidating. Though we're still waiting to see whether we're going to see a follow through to the upside from this wedge breaking up. All right, let's run through the other commodities quickly. KC. IHS hasn't failed yet, but may well be failing. If that's the case, then this will head back into these lows, and that could be the second low of a double bottom. We shall see. All right, looking at sugar. The IHS here, I have to say, looking at the daily charts, I actually like this IHS. It's in the ideal right shoulder low area at the moment. I'm thinking this might deliver, in which case, of course, the next move is up, and we could well see a break up, which would take us towards a retest of this high here at 19.75. On CC, 60-minute sell signal has reached the possible near miss target. We've broken down from a little level top. No, sorry, head and shoulders here. That is a head and shoulders, isn't it? Hang on 1 second. In that case, I'm removing this arrow. So the head and shoulders is trying to break down with a target at about the 95.50 area, but of course we're testing the weak pivot, and at the moment that's holding. So it remains to be seen whether it's going to go any lower. Looking at cotton. Cotton, we've got a double bottom that's broken up here. At the moment, it's failing at double resistance at the weekly pivot and the monthly pivot, and it may not get above that. If it does get above that, I've got a target at 67. If it doesn't, then we're going to go back to the lows. In terms of lumber, kicking around, still got an overall downward lean. ZW, nice break up here. This did look like it might be a bear flag, but no longer looking like that. A full 60-minute sell signal has fixed. On corn, we had a 60-minute sell signal fixed too, but that has failed. So again, we had a nice looking bear flag, but it's broken up from that. So I'm leaning towards higher. I do think, ignoring, well, I've been told that, and I haven't looked thoroughly into it myself, I'm mainly about the charts, but I've been told that there's quite a large excess of wheat and corn. But I have to say on the charts, I've got decent contenders for significant lows on both. We will see. Right, soy. Soy, we've got a little double bottom has broken up here, and I'm wondering about a retest of these highs. Still in question whether or not that's going to make target. It's still testing the weekly pivot. Soybean oil, not a lot to say really. Possible head and shoulders forming. Live cattle, still wondering about a bit lower after this wedge broke down, and on lean hogs, the wedge has now broken down, and I'm wondering about a bit more retracement there too. We shall see. All right, great. Let's have a quick look at questions. Yeah, my pleasure. It's bigger picture was fun last night. I've got to say things are really starting to look pretty interesting, and I still think this is I still think the main excitement for this year may actually be ahead of us rather than behind. So it's going to be fascinating to watch just from an economist's point of view, really. So these are interesting times. All right, yes, we could be bottoming out here. We've got a lot of 15-minute buy signals across the US indices, and I am wondering when we've got obviously possible buy signals brewing on RTY, on YM, both of those trying to fix at the moment, and it may be that this is all we're going to get on the retracement. The historical stats are telling us that basically the next week and a half to 2 weeks lean bullish. Anything, if we are going to see more on the retracement, I'd be expecting to see that today. Anything after that is lower probability because it's fighting the historical stats and because we've really run out of the sell signals, the main sell signals that I was watching. So we'll see how that goes, and I'll catch you guys tomorrow morning. Everyone take care.